So what's your margin strategy? If you know what a margin is, margin basically says that you trade someone else's money. You borrow money or you borrow stocks from your broker and you sell them hopefully for a better price than you paid for them, or that you get a difference between the two. You hope that the money goes down because that way you have to buy them for less to give back to your broker and you make the money on the difference. So with that basic margin strategy, here are some things that Scottrade can do for you. Margins can be used to increase your market exposure, providing fast access to cash for your personal needs. They can be cash real quick if you know what you're doing. Trading leverage, personal loans, risk management. They have information about margin interest rates, margin risks. Everything has a risk, right? Everything has and you have to be charged money for an interest rate for borrowing the money from your broker and so forth. Once you open a margin account, it offers immediate access to the borrowed funds without any extra paperwork, credit checks, or approvals. In addition to being easy to access, margin loans can be lower interest rates than other loan types. Of course, you have hedging your bets and increasing your overall diversification if that's what you're wanting to do. That's your risk management factor. If you want to read more about your risk management in your knowledge center, you can see the risk management. You can go to the Scottrade Management Center and you can look at what they have to talk about on risk management and how that can help you to understand your trading and your margin accounts especially. When you don't understand something, risk management is a good thinking way of a strategy, but also you have to understand that everything has risk and also has commensurate reward. Of course, now they show you with the margin interest rates and so forth. If you have $10,000, that'll be $2.75, 2.5%. You have over that, it depends on what your amount that you have in your account is opposed to your interest rate. So you increase your buying power, you take advantage of competitive interest rates, you can have an accessible use of credit, and you can enjoy a flexible repayment schedule. Basically, like I said, you borrow something from your broker and then you pay for that. Here you can see that it's a demonstration of what an investment account is, what a margin account is, some of the things that Scottrade specifically talks to you about as a margin account. Now, in their thing, they talk about margin account basics and the way that they're used and how you can use that to increase your income or your money that you get from the stocks and so forth. That is one way that you can do. If you can understand that it's basically borrowing something that you don't own from your broker and hoping that the price goes down so that you can sell it back into the market and make the money on the difference that it costs you to buy it from them and sell it back and you give it to them. It's known as covering your margin. And as you can see here, you have the money and the borrowing and so forth. So that's what your margin strategy is all about.